Gold saw extreme volatility overnight on surprise news that China devalued its currency. Does this mean gold is regaining its safe haven status? Peter Hug joins us today. Peter, good to see you.
Nice to be back.
So, Peter, let's start by pulling up that gold chart for this Tuesday. Gold hitting a 3-week high. What's happening here on the metals front?
I think this move was set up on Friday with the employment numbers coming out. They were relatively okay at about 215,000 job creation in July, which should have encouraged the bears to hit the market lower. And there was a big buy order that came in and stopped the downward momentum and took gold back up into the 109.5, 109.8 level. An interesting thing was with that level up around $1,100, the Asians and the Europeans didn't sell into it on Monday morning, and the momentum just carried through.
So, Peter, let's get to the big news of the day. China devaluing its currency by 1.9%. What do you make of the move here by the PBOC?
Well, I think it was a necessary move, and I think there's more coming from the Chinese. I think they're going to stimulate the economy as much as they can. I think China's in some serious trouble in the short term, and it's going to be affecting global growth, especially European growth. I think globally there's a serious danger of a major deflationary risk here, which is positive for gold in the sense that it now creates a safe haven aspect to gold, which it hasn't had for the past 6 odd months. But it also, I think, probably holds the Fed off in September. I can't see the Fed moving in September given the global situation right now.
That's an interesting thought, Peter, since most are expecting a move in September. But what happens if they continue to devalue their currency? What will this do for gold, especially demand?
Well, if you're talking from a Chinese perspective, if the yuan depreciates, it'll raise the price of gold in terms of yuan. But I don't see the Chinese moving into gold immediately on a yuan devaluation. I think the Chinese investors have their hands full just trying to get out of the Chinese stock market. There's some serious issues over there with the housing market as well, and so I think gold will benefit sort of on a macro basis, on a global basis, but the devaluation of the yuan won't necessarily translate into Chinese demand immediately.
All right, Peter, let's wrap by looking at silver today. How is the metal doing?
I think it's a little ahead of itself. On a ratio basis, it's trading around 73 to an ounce of gold. If the deflationary scenario is accurate, in my mind, I think silver should move back maybe to a 75 to 1 ratio. So to put that in perspective, if gold stays at current levels, silver's probably overvalued slightly, maybe 30, 40 cents at current levels. But silver is not going to move here independently to gold because of the, again, deflationary risks. Silver having an industrial metal, a usage component to its price. I think silver lags gold here, but will move in sympathy with gold. And I think, as I mentioned again this morning, as I said Friday, I thought the move is going to be higher before lower. I still think there's some upward movement here in gold, before it starts to level out.
Peter, thanks so much for your thoughts today.
You're welcome.
And we have Brett Cook of Exploration Insights coming up next on the Gold Report. Thanks for watching.